Hello, traders. Cousin Vinny coming to you from theclosingprint.com, April 16th, 2023. In this video, we'll discuss the indices, all of which moved higher, with international markets looking very strong, and an area we will most likely focus on this week.
There you go.
Starting off the week, we did have a pretty decent performance from the U.S. indices as well as international markets, with earnings starting on Friday and good results out of JP Morgan and PNC as they rose markedly, with JP Morgan up nearly 9% for the week, giving analysts something else to think about. We have 13 bullish indicators, 4 neutral, and 3 going into Monday and Tuesday trading, with some excitement building in the international markets. With the iShares ACWI, All World Index ex-US, about to break out, I'm pretty excited about the prospects here. I might start a position looking for these 52-week highs that were back in late 2021, early 2022, and some of these pivots along the way. We also had emerging markets looking strong, moving above its 10 EMA, looking for a follow-through. I did start some EEM last week, looking for continuation. Along with the emerging markets, we're also seeing major country ETFs like the United Kingdom, UK, EWU trying to break out and above its rising or bullish 10 EMA weekly. In addition, we saw Greece and some of the European countries moving higher, with France breaking out of a multi-year pivot level, pushing higher on the weekly time frame. Along with Italy, Spain, France, we're generally seeing strength in international markets. So ACWI is a potential buy this week for a longer-term holding. The S&P 500 did manage to stay in the top part of its range, below 4150. We closed right at 4137. We're looking for a test of that level, 4150, 4200 potentially. As we can see, the call walls have been building at higher strikes, 4200, 4250, 4300, and even some out here at 4350 and 4400. So if we can start to see these strikes build and some of these puts moving upward towards that 4100, 4150 level and start to build some market structure underneath as support, we'll look for higher prices and direction from institutions. That goes for the Qs as well. The NASDAQ, with the tech stocks holding near the highs, we're looking for the same with a very large strike at 320 that we're watching. A break above that level resistance would be significant. We'd be looking for strikes at higher prices further out in time to build. Though we do have OPEX this week, so we're very focused on what's going on in the 10-year yield. If that starts to fade again and move lower, that would be bullish for equities, especially in the tech sector. If it moves a bit higher, it's above the 200-day now, we'd test the 50-day. That would potentially be a headwind for tech stocks. Yet another reason to look outside of the U.S. going into this OPEX on Friday. That said, we would like to see small caps participate. Most of the small cap sectors did move higher, with a laggard in small cap financials, which does have significant resistance right near the 200-day moving average. As you can see, lots of calls and puts along that strike at 180. But there are strikes building further out that we need to keep an eye on. Overall, we do have pretty significant resistance, so we'd like to see small caps moving higher into this OPEX. The one negative that we have for this week is that breadth did fade somewhat, moving sideways to slightly lower in most cases, with the NASDAQ pulling back, with that headwind in the US dollar, with it bouncing, and the 10-year yield moving higher. We'll look for strength. There is room to the upside. If earnings start to look a lot better and institutions start to buy, this will be the first thing that we'll notice going into this week's earnings and OPEX on Friday. Breadth, as can be seen with the NASDAQ McClellan Oscillator, mirrored very similar in the NYMO, the New York Stock Exchange McClellan Oscillator. Both of these formed a trough in mid-March, continues to push higher. We'll look for that breadth to continue, which is reflected in the New York Stock Exchange composite price action. You can see we're above the 200 and the 50-day moving average, and all common stock McClellan volume oscillator is starting to get near extreme overbought. At the same time, we're watching new highs trying to overtake new lows back above the zero line. Keep an eye on that black line, looking for a follow-through. More importantly, advanced decline is above the 200-day moving average. That's flattened out, the blue line. Looking for that to turn up if you're bullish and down if you're bearish. We are coming close to another pivot level up here near 16,000. So we'll watch how the New York Stock Exchange performs into earnings over the next couple of weeks. All of these stocks from the IBD 50, especially those with an asterisk next to them, need further examination as most criteria are set up for a follow-through, namely stochastics oversold and turning. Relative strength is showing strength of trend by being above 50 and moving towards 80. And sectors that are seeing relative strength, like the banks on Friday with JP Morgan gapping up nearly 9%, and some of the consumer discretionary stocks, along with healthcare and retail, restaurants and bars. For example, stocks like Agilon Health were on the previous watch list, continue to trend, looking for 52-week highs on a breakout of this relatively inexpensive name. Stochastics rising, volume looking pretty strong as well, with many stocks like Allegro Microsystems, ALGM, stochastics oversold, sitting right on the 50-day, looking for a bounce. You has to see the bounce and stochastics turn as a function of price to remain interesting. I'd like to see the entire semiconductor index bouncing on Monday and Tuesday as well. Along with the Arista Networks, you can see stochastics turning. It's right at the 21-day, looking for buyers to step up. AMD on the IBD 50 as well has been consolidating over the last 3 to 4 weeks. After pushing above 100, it has pulled back. RSI is sitting at 50, looking for a bounce. And for this volume by price area here to form support along with the 50-day, watching for volume to come in and stochastics to turn higher. Many of the energy stocks showing relative strength over the last couple of weeks. Hess a bit embedded on stochastics, so I'd rather it was down here near the lows like we had in the third week of March. That said, energy, looking for more stocks to follow through. There was a very large block of options on Pioneer Natural Resources, PXD. That's the one that's in talks with ExxonMobil. On holdings, looking for that to push higher. O'Reilly Automotive showing relative strength. Rambus continues trending. We got IoT, that's been on a previous watch list, looking for a follow through. Salesforce, that's looking really strong. After this earnings gap up, CRM continues to show relative strength. Stochastics is set up, looking for a push off of the 21-day. Nice bullish trend in both the 21-day and the 50-day moving averages. You might also want to look at some of the consumer discretionary stocks. In particular, restaurants and bars have shown strength. Wingstop looks like it wants to break out. Stochastics turning. Volume picking up. MACD's turning as well. RSI is rising. So if we can see more stocks from the group, like Shake Shack and McDonald's, and that would signal potential relative strength and follow through into earnings. Also check out these stocks under the listing relative strength, especially the ones that have asterisks next to them, looking for a follow through. For example, we have Louisiana Pacific with a really nice setup coming into the week. Look at the volume. That's institutions picking up shares off of a multiple level bottom, if you will. It's only up, about 7 points. after trading about 10, 15 million shares, trading hands. Just remember to check for earnings on any of these stocks that we talk about, seeking potential for follow through this week. Piedmont Lithium also looking pretty strong. Looking for this bounce to continue. Nice volume coming in. It's stochastics is rising though. Looking for these stocks to follow through, especially in the alternative energy group. In addition to inexpensive stocks like CVII, Churchill Capital in the financial industry, looking for a follow through. Doesn't trade a whole lot of volume, so this is a bit more risky, but it does look good. Stochastics turning up, MACD turning, RSI rising. Just remember to check earnings dates. And finally, just to repeat myself, ACWI, I'm very interested in what's going on in the international markets. Most of the international ETFs are pushing higher, breaking out of patterns with ACWI above its bullish 10 EMA weekly, with its daily rising along its 921 day above the 50 and the 200 day, looking for more volume this week. Previous couple of weeks, back in late March, there was a lot of activity, looking for that to continue on a breakout as institutions take positions and waiting out the earnings in the U.S. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for April the 16th. I'll send out a watch list later tonight around 12 o'clock midnight on the East Coast and around 9 o'clock on the West Coast. So be sure to check your inbox for that later tonight. Otherwise, take care, have a great evening, and we'll see you in the morning. Ciao.